Welcome traders, I'm Danjuna FX, a professional mentor in smart money concept and trading psychology dedicated to helping aspiring traders achieve consistency, confidence and clarity in the market. Here is a message from my students inside our growing community, a space built for serious learners who are committed to mastering the arts of trading. If you are ready to transform your trading mindset, sharpen your technical skills and be part of a result-driven community, you are more than welcome to join us. This is where learning meets real growth. Let's grow, stay disciplined, and win together. Before we dive deeper into charts and setups, let me introduce you to one of the most important concepts in trading: liquidity. Liquidity is the reason why price move the way it does. It is the money in the market sitting in the form of stop losses, pending orders, and trap traders. In trading, price doesn't move randomly. Big institutional, bank, hedge funds, and smart money move a price to area where liquidity is hiding. Or have you ever wondered why price hits your stop loss, then suddenly move in your direction? It is not by accident, it is because of something called liquidity. And today I'm going to teach you what that means. Let's start with a simple definition of the word liquidity. Liquidity is the money in the market, orders waiting to be activated. It is where traders put their stop losses, pending buys and sells, or take profits. That's where liquidity gathers. And then big institutional like hedge funds, banks hunt those areas to manipulate price, and also they enter their trades, and also they trigger retail traders like us. Okay, and then why liquidity matters. Institutions need liquidity to fill their big orders. They manipulate price to zone where many stop losses sit. And also, when you understand the meaning of liquidity, it will help you to avoid getting trapped and trade with smart money. And also, we have two types of liquidity. We have buy side liquidity and we have sell side liquidity. And let's start with the sell side liquidity. What is this sell side liquidity? Sell side liquidity, it is where price form equal low and then retail traders long, and also it is where stop losses are below the low or equal low. Okay, and also let me use this example here. Okay, in this case, as you see, market structure is moving upward direction. Okay, and then it break move up, break equal low, and then it started moving up. Then after that, this price started pulling back. Okay, move down, and this area is called equal low, and above here is called lower high, and then here is called equal low, and this is called lower high. You know, some traders, when they see price has already break their lower high, sometime when you don't understand a smart money concept, some traders, they will buy from here. Okay, let me show you in this case. Okay, they say, you know, price right now it has already break our lower high, and then they will put their buy here, and then they will put their stop loss, let's say somewhere here, and then they will target the equal high. Guess what? Price will come, will sweep your liquidity, and then you start crying. You start saying, you know, forex is scam, you know, forex is not real. This is when you don't understand the meaning of liquidity, guys. Okay, come on. Okay, trade like a smart money. Okay, and then let me tell you one thing first. Okay, anything inside this box, okay, anything inside this box is called internal structure. Okay, this is just a pullback. This is just a little pullback. Price will come, will mitigate this demand zone, and then we'll move to a direction. Okay, anyway, let me show you how to spot liquidity. Okay, then after that, after your price break this equal high, what you need to do, you need to mark your beautiful demand zone. Okay, then after marking your demand zone, you wait your price to move down, to move to an area, and then sweep more liquidity below this equal low. Okay, and again, some traders, they will mark their demand zone well. Okay, like this one, and then after price mitigate their demand zone, they will enter their buy from here, and then they will target, let's say, equal high. Okay, and then they will put their stop losses below demand zone. Come on, guys, price will just come, price will hit your TP, I mean your stop loss. Okay, this is how institutional manipulate us. Okay, this is just a trap. Okay, so you need to trade like a smart money. So what you need to do, you should be patient. You wait your price to sweep liquidity below this demand zone or below equal low, and then after that you don't need to enter to your trade immediately. You need to confirm that this pullback is over. Now we are moving to the moon. Okay, so what you need to do, and again you need to spot a change of character or market shift. Then after that you mark your 15 minutes demand zone. Okay, after marking your 15-minute demand zone, you wait your price to come to your demand zone, then you enter your buy from here. You put your stop loss below this 15 minutes demand zone, then you target again equal high. Okay, and remember, below this 15 minutes demand zone, it is protected. This area is protected because price has already swept liquidity below this equal low. So you don't need to say price will come, price will eat my no need of that. Okay, you just need to be confident. Okay, you need to believe yourself, you need to believe your setup, then you enter your buy from here, then you target your equal high. Okay, it's simple as that. And let me move to the buy side liquidity. Okay, a little brief introduction of a buy side liquidity. This is where price sweep liquidity above every equal high. Okay, and then it is where institutional will push your price to grab liquidity through those areas as actually equal high, and also after price grab your liquidity, then it will reverse. Okay, and then in this case, as you see, market structure is moving downside direction. Okay, and again price move down, break equal low, okay, or lower low, and then after that market is starting what it started pullback. Okay, it started reversing to this area. It's same case. Okay, then you mark your supply zone. Okay, after marking your supply zone, you should be patient. You should wait your price to grab liquidity above equal high, and then after that you confirm that this pullback is over. Now we are moving to the L. So what you need to do, you need to spot change of character. Okay, which it will tell you that this market, this price is changing character. Okay, this price is the time to move to the L. So, and again after price grab your liquidity above equal high, you need to be patient. Then you mark your 15-minute supply zone, and then you enter your sell from here, and then after that you put your stop loss above supply zone, because this area is protected, as I told you, because price has already swept liquidity above equal high, and then you target the next equal low. Okay, it's simple as that. And this is when you know the meaning of liquidity. When you understand liquidity, institutional will never manipulate you. You trade like a smart money. In case of yapping, let me go to the chart and then I'll show you how to spot this liquidity. Okay, let's look example on GJ. As you see, this price overall market structure is moving upward direction. Okay, so in this case, what you need to know, you need to spot breakout structure. You need also to mark your demand zone. Okay, and then you need to mark where price will sweep your liquidity, or where price will grab your liquidity. Okay, and then let's spot an equal high. Okay, these are equal high. As you see, this price has already break this equal high, and then move up and again sweep liquidity above here before it reverse to our area. Okay, so, and again you mark your demand zone. Okay, so in this case this area will be our demand zone. Let's mark our beautiful demand zone. I don't know why I love to use that term, but it's okay, well and fine. Okay, okay, nice one. After you're marking your demand zone, you wait your price to come back to your area. Okay, and again, as you see, anything inside this box is called internal structure. Anything inside this box, okay, it's called what? It's called internal structure. Okay, and again, as I told you, this area is very, very important. Okay, these are equal low. Okay, and this is a lower high, and these are equal low, and these are lower high. So as you see, in this case, this price has already break lower high, which shows us that this price soon it will gonna move to the moon. Okay, and then you wait your price to come down to mitigate this demand zone. Then after that, after your price mitigate your demand zone, you wait. You should not immediately enter to the trade. Okay, you should wait your price to sweep liquidity. As you see, in this case, price has already swept liquidity or grab liquidity below this equal low. As you see, after price grab liquidity, and again, as I told you, you need to wait for a change of character or market shift, okay? And then you enter to the you spot your change of character, and then you need to be patient. Remember, as a trader, patient is very important, and remember, patient pay, okay? And then after that, you mark your another demand zone. You wait your price to come to your area. These are demand zone, and then as you see this price move down, you enter your buy from here, and it's simple as that, guys. Okay, it's not a big deal. This is when you understand liquidity. And then after that, you can also put your stop loss above this equal high, or even the better way is to place your TP or your TP around this new equal high. Then you put your stop loss below your demand zone. Okay, I'm sorry, guys. And it is simple as that, as you see. And then some traders, when they don't understand liquidity, they'll just buy from here after their price mitigated their demand zone, and then they will put their target above this equal high, and then they will put their stop loss below their demand zone. Guess what? Price will do this, okay? Price will come. At first, they enter to the trade, they will be happy because price is moving, and then later price will move down, boom, will sweep their liquidity, and then they will cry. They'll say, forex is scam, these things is not real. No, come on, my brother, come on, my sister. Okay, you need to understand liquidity, and remember, this is just a trap. Okay, institutional, they set you this trap to grab your money. And this is when you don't understand liquidity. As you see, it's very easy. So what you need to do, you need to watch this video and practice in your real chart. Okay. Let me go to a buy side liquidity. Okay, as you see, these are buy side liquidity. Okay, as you see, market structure is moving downside direction. Okay, so what you need to do here, you need to mark your new equal high. As you see, this, in this case, this will be our new equal high. Okay, you mark your new equal high. Then after that, after marking your new equal high, you need this price to move up. As you see, in this case, this price break our overall was moving downside. Okay, it's already break here. Then after breaking here, you need to wait. Okay, these are equal low, it's already break this equal low. Then you mark your equal high. Okay, then you wait your price to sweep liquidity above this equal high. Okay, then after sweeping liquidity, you don't need to enter to the market just like that. You need to confirm. Okay, so what you need to do, you need your price to break a higher low. Okay, as you see, in this case, this price has already break higher low after sweeping more liquidity. And then after that, you mark your supply zone. Okay, as you see, in 15 minutes, and again it swept more liquidity above here. Okay, in this case, this round we are using 15 minutes time frame. Sweep liquidity, and again above this equal high. Okay, then after that, after sweeping liquidity, you wait your price to change character, and then after that, you mark your supply zone. Okay, so in this case, this will be our supply zone. And then after marking your supply zone, you enter to the trade without any fear, with confidence. Okay, so as you see, in this case, you enter from here, and then you need to target somewhere. Yeah, I'm sorry, guys, I'm sorry. Let me do like this one. Nice one. Then you put your stop loss above your supply zone, and then you can target equal low or low swing. Okay, as you see, in this area, this price move down, break our change character. After changing character, we mark our supply zone. After marking our supply zone, this price pull back, retest this supply zone, then it started moving to our area. It is easy, it is simple when you understand the meaning of liquidity. The market will test you before it rewards you. Trading is not just about charts and setups, it's about mindset. There will be losses, fake out, and moments you feel like giving up. Remember this: every pro trader was once a beginner, every blown account was a lesson. Every sleepless night can lead to success if you stay disciplined. You are not just trading charts, you are building mental strength, patience, and financial freedom. Don't quit because it is hard. Push through because it's worth it. You already have what it takes. Keep studying, keep practicing, and most importantly, keep showing up. As I always say, your breakthrough is hiding behind your consistency. I love you so very much. Please, and again, subscribe my YouTube channel. Right now, we are 700 subscribers. Let's at least push to 1,000 subscribers by the end of this month. Mwah!